This journey of trading has been the most frustrating thing I've ever done in my life," said Joe, a long-term subscriber on this channel, whose frustration I could feel leaping out on the screen I was reading his message on. "Nothing else has been this exasperating. I've taken courses, spent hundreds of hours watching trading videos on YouTube, and followed people I only later learned were complete trading frauds. I've tried hundreds of strategies and indicators looking for the Holy Grail, only to realize it doesn't exist. I've tried scalping, day trading, swing trading, all with little or no success. I'm not looking to become a millionaire overnight. I just want to succeed at trading so I don't need a full-time job to pay the bills, so I can have freedom of time. It might sound dramatic, but at 55 years old, it feels like I'm running out of time to make my dream a reality. I'm very good at my day job, but I've realized that what makes me successful at work doesn't translate to trading success. I consider myself a pragmatic person, but I just can't figure this trading thing out. Any help or guidance would be greatly appreciated." Frustration, hope, frustration again. Bigger hope, bigger frustration again. This is a common cycle of the typical trading journey. We've all heard the stories of overnight trading success somewhere, but the reality of trading is far less glamorous. Many traders like Joe experience immense frustration on this journey. They've poured hundreds of hours into learning, chasing strategies, and following trading gurus. Another channel subscriber, we'll call him Mark, wrote to me about how he also wrestled with the question of whether trading was a viable path for him. Mark spent years experimenting with different styles, from forex to synthetic indices, but consistent profits remained elusive. In his own words, he wrote, "For the first year, I learned about forex from YouTube and baby VIPs. In my second year, I transitioned to synthetic indices because I preferred a market not affected by news, and also because it required a small starting capital. I used demo accounts the whole time, but haven't been able to make consistent profit. In my third year, I returned to forex when I heard of prop firms. Then, I learned a trend strategy from Adam Ku's videos. However, at the end of my third year, I decided to rewatch the learning videos. This rewatch helped me realize my mistake in applying the trend strategy. I had been trading the strategy wrongly the whole year. I didn't learn well enough before trying it on demo accounts. This led to me failing 2 prop accounts due to exceeding the maximum overall loss. Interestingly, I did have the discipline to stick to the bad strategy even during the losing periods. After realizing my mistake, I backtested the entire year of 2023 and made some modifications to the strategy. This backtest resulted in a 43% win rate and a 55% total return. It has been 2 months since the backtest. In the first month, December, I made 0.6%. In January, I made 0.3%. February is almost over, and I'm currently down about 4%, all on demo accounts. Now I'm considering trying a prop account again, but I'm unsure. Do I need more experience on demo? Do I need to further develop the strategy, or perhaps work on my trading psychology?" From these traders' stories, a familiar theme emerges, and I'm sure it's one that resonates with many of us. During the early days of my trading journey, I also questioned if this path was truly right for me. But there's a silver lining. No matter the obstacle, the human spirit endures. We all have the capacity to persevere. As proof of this statement, we can see that Mark identified a flaw in his approach and backtested a modified strategy with promising results, while Joe is actively seeking ways to improve his skill set. Their stories might not sound like it right now, but this is the spirit of a true trader. The path to trading success. Slow and steady wins the race. Forget those flashy, get-rich-quick stories. Real trading success is built on consistency, not home runs. Think of it like building a brick wall. Each small win is a brick. Keep laying them, even on tough days, and you'll be surprised how high you can build. Losses aren't failures, they're lessons. We all mess up, even the pros. Remember that time you burned dinner trying a new recipe? It's the same with trading. Losses sting, but they teach you way more than any win ever will. Embrace them, learn, and come back stronger. Ditch the Lambo dreams. We all get sucked into the idea of fast cars and beach vacations, but that's not what trading is really about. It's about challenging yourself, learning a new skill, and taking control of your financial future. Those fancy things, they might come later, but they're a bonus, not the main event. It's a life skill, not just a market skill. Trading isn't just about charts and numbers. It's like a mental boot camp that teaches you to stay cool under pressure, make smart decisions, and keep your emotions in check. Those skills will pay off in every area of your life. Trading is a mirror. It's not about the market, it's about you. Your strengths, your weaknesses, your fears, they all come out to play when you're trading. It's a chance to really get to know yourself and grow in ways you never imagined. Michael wasn't your typical Wall Street hotshot. Sure, he had the ambition and the charm, but his experience came from years as a mid-level analyst at a reputable investment firm. He craved the autonomy, and perhaps ignorantly, the prestige of being his own boss. So, with a war chest of $50,000 saved from his years of steady work, Michael decided to strike out on his own. His plan was bold. He'd target friends, family, and even casual acquaintances, promising them a staggering 10% monthly return on their investment. It was a seductive offer, and fueled by Michael's charisma and an initial string of lucky trades, he quickly amassed a pool of investors, doubling his trading capital by 100% to $100,000. The initial returns were impressive, fueled by both genuine market gains and some creative accounting on Michael's part. This success fed his confidence and snowballed his reputation, attracting even more capital. However, Michael wasn't a seasoned trader. He was a gambler at heart, and the easy money intoxicated him. He began taking on increasingly risky bets, convinced that his hot streak would continue. He leveraged his holdings, chasing ever higher returns to keep the payouts coming to his growing base of investors. However, the market eventually shifted, as it always does. Michael's risky ventures turned sour, and his losses mounted. Panicked, he tried to recoup his losses with even more reckless plays, but it was a desperate attempt to plug a gaping hole with a tissue. Months that were supposed to yield a comfortable 10% return turned into agonizing losses. Investors started calling, their initial excitement replaced by a sickening dread. Michael, consumed by shame and facing financial ruin, finally came clean. His initial capital of $50,000 was gone, along with the money he'd so confidently promised to grow. The dream of easy riches had turned into a devastating nightmare, shattering not just his reputation, but the trust he'd built with friends and family. I'm willing to bet that we all know a Michael. You know that guy that talks a good game, dressed in sharp $1,000 suits, and claims he's raked in millions from the market. Let's forget about the $1,000 suits. Maybe you've been a Michael. I know I've been a Michael. In the early days, my initial trading wins got the better of me. I excitedly shared my success with friends and boasted that I found the way to make money from trading. I even promised to double their investments in 6 months. And why not? I'm now a trading genius. And 2 of my friends, bless their hearts, trusted me with $1,000. We used the money to buy a $100,000 prop account. I passed the challenge phase, and I started trading. Maybe it's the pressure of the magnitude of trading a 100K account for the first time, or the pressure of not wanting to let my friends down. What happened to Michael ended up happening to me. I started abandoning my trading plans, started getting emotional and chasing losses, and in a short while, I blew the account. Maybe right now, you've started raking in. Overconfidence can kill your account. Remember, even the best traders lose. Early wins can trick you into thinking you're invincible, but the market will always humble you. Stay grounded, stick to your plan, and don't get cocky. Don't gamble with your future. Only risk money you can truly afford to lose. The pressure of trading with borrowed money or funds you need for essentials will cloud your judgment and lead to reckless decisions. Risk management is your best friend. It's not about avoiding risk entirely. It's about being smart about it. Set stop losses, use proper position sizing, and have a plan for when things go wrong. Protect your capital like it's your lifeline. Discipline beats excitement. The market is full of temptations, but discipline is your superpower. Stick to your trading plan, even when fear of missing out kicks in. Emotions are the enemy of a successful trader. Promises of easy money are huge red flags. Anyone guaranteeing big returns with no risk is likely a scammer. If it sounds too good to be true, it probably is. Do your own research and focus on building a sustainable strategy, not chasing overnight riches. Jim slammed his laptop shut, the glow of the screen momentarily etching lines of defeat across his face. Another red day, another loss. He poured his life savings into day trading, seduced by the siren song of quick riches and escape from his dead-end office job. Online forums were a cacophony of success stories, Lamborghinis bought on margin, and champagne showers funded by perfectly timed trades. But for Jim, the reality was ramen noodles and a sinking bank account. Discouragement gnawed at him, a familiar feeling these past few months. Yet a strange compulsion kept him glued to the screen. He wasn't the only one. Statistics he'd skimmed online claimed a staggering 95% of day traders lost money. But here he was, part of that statistic, and yet, inexplicably, still playing the game. One evening, amidst the usual online braggadocio, Jim stumbled upon a different kind of post. A seasoned trader, calling himself Zen Master, spoke not of riches, but of discipline, strategy, and the emotional roller coaster that was the market. He painted a picture of day trading, not as a path to easy money, but as a demanding profession requiring focus and unwavering control. Intrigued, Jim delved deeper. Zen Master wasn't promising Lamborghinis, but a different kind of wealth. The knowledge to navigate the market's chaos, the discipline to resist emotional impulses, and the resilience to learn from losses. It was a far cry from the get-rich-quick schemes Jim had initially envisioned, but a seed of hope was sown. From that day, Jim approached the market differently. He followed Zen Master's advice, meticulously planning his trades, setting stop-loss limits, and prioritizing risk management over chasing immediate gains. The losses still came, but they felt different. They were lessons learned, not punishments dealt by an uncaring market. The road ahead was long and arduous. Jim wasn't under any illusions about becoming a master trader overnight. But for the first time, he wasn't just gambling. He was learning, adapting, and slowly chipping away at the mountain of conventional wisdom that 95% of day traders were destined to fail. Perhaps, he thought, with the right approach, he could become part of the elusive 5%. Months rolled into years. Jim's ramen diet was replaced with something resembling a balanced meal plan, thanks to a part-time job he picked up. The green days, while still infrequent, brought a sense of accomplishment that transcended mere profit. He learned to read the market's whispers, the subtle shifts in price and volume that signaled opportunity. The emotional roller coaster remained, but the highs weren't as intoxicating, and the lows were met with a newfound stoicism. Then came the turning point. A global economic event sent shockwaves through the market. Panic rippled through online forums, the get-rich-quick crowd scrambling to cut their losses. But Jim, armed with his hard-won knowledge and unwavering discipline, saw an opportunity. He placed a calculated short sell on a tech stock that had been inflated by hype. It was a risky move, but Jim had meticulously analyzed the technical indicators and market sentiment. The gamble paid off. As the stock plummeted, Jim watched his account balance climb for the first time in a long time. It wasn't a Lamborghini-worthy windfall, but it was a significant profit, a testament to his dedication. The experience solidified his resolve. He wasn't just surviving the market, he was starting to thrive. News of Jim's success, albeit modest, spread through the online trading community. Zen Master himself reached out, offering mentorship and encouragement. Jim, once a lurker on the forums, now found himself dispensing advice, sharing his hard-earned wisdom with newbie traders. He wasn't promising Lamborghinis, but something far more valuable. A roadmap to navigate the treacherous waters of the market. A philosophy of trading that prioritized knowledge and discipline over blind hope. Jim was still a long way from the financial freedom he'd initially craved, but he had found something more profound. A sense of purpose, a mastery over a complex system that rewarded patience and strategic thinking. He was no longer a statistic, but a testament to the 5%. A living example that defying the odds wasn't about blind luck, but about unwavering dedication and the pursuit of knowledge. The market remained a fickle beast, but Jim, finally, wasn't afraid to dance with it. Imagine trying to win a high-stakes poker game against a table full of sharks. That's kind of what trading feels like. It's exciting, sure, but don't get sucked into the hype. The market's full of shiny promises of easy money. Remember Jim? He fell for those too. But the truth is, trading is hard. It takes real work and discipline, not just dreams of Lambos. The market is unpredictable. Think of it like a moody friend. One minute it's all sunshine and rainbows. The next it's throwing a tantrum. You can't control it, so don't even try. Instead, focus on controlling your reactions to its mood swings. Losses are part of the game. Even the pros have losing streaks. It's like learning to cook. You'll burn a few dishes before you master the recipe. The key is to learn from those losses, not let them crush your spirit. It's a marathon, not a sprint. Trading takes time and dedication. There's a steep learning curve, and it's easy to get discouraged. But if you're patient and willing to put in the work, you'll see progress. Remember, slow and steady wins the race. It's more than just money. Sure, we all want to make a profit, but trading is about more than that. It teaches you discipline, risk management, and how to keep your cool under pressure. These are skills that'll help you in all areas of life. Don't give up, even when it gets tough. You've got this. Dominic's home office pulsed with a tense quiet. Two monitors cast an eerie glow, their relentless stream of charts and numbers a stark reminder of his nightly battle day trading. A cold mug of coffee, long forgotten, sat beside him, its condensation leaving a damp ring that mimicked the cold sweat forming on his brow. Dominic's eyes, however, were glued to the screen, mirroring a gambler fixated on the spinning roulette wheel. The rhythmic click-clack of the keyboard beneath his tense fingers was the only sound that dared to break the silence. Losses piled up, each trade feeling like a gut punch. His meticulously planned entries, honed over months of studying market trends and technical indicators, dissolved into despair within minutes. The carefully constructed spreadsheets and meticulously researched company profiles seemed like taunts in the face of the relentless market. Tonight, though, a different emotion flickered in his eyes. A cold, steely glint of resentment. "The market owes me," he grumbled, his voice hoarse from disuse, fixated on a stock in a nosedive. This was the gambler's fallacy taking root. Dominic, consumed by frustration, clung to the notion that the next trade simply had to be a winner. The market in his mind had become a sentient being, toying with him. Fundamentals and technical indicators screaming caution were ignored. All he saw was a chance to settle the score, to make the market pay for its perceived injustices. In a desperate lunge, he bought a significant chunk of the stock, a reckless bet against a current he couldn't comprehend. The click of the confirmation button echoed in the tense silence, a finality that sent a shiver down his spine. The next morning brought no reprieve. The stock price plummeted further, mocking Dominic's impulsive decision. The pit in his stomach deepened with every tick of the clock, a physical manifestation of his mounting financial woes. He should have cut his losses earlier, as the flashing red sell button on the screen seemed to scream at him. But the gambler's fallacy had him grasping at straws, hoping for a miraculous turnaround, a hope that faded with each passing second. The once vibrant green charts on his monitor now seemed a sickly shade, reflecting the hollowness he felt inside. Finally, after an agonizing internal struggle that felt like an eternity, Dominic exited the trade, swallowing a bitter loss that felt heavier than the mug of coffee he hadn't touched. Shamefaced, he shut down his computer, the harsh lesson echoing in the sudden silence. The market has no memory, no sense of fairness. Each trade stands alone, not a coin toss where tails must inevitably follow a string of heads. It was a harsh truth, but a necessary one. This story serves as a cautionary tale about the gambler's fallacy, a cognitive bias that trips up many traders, including Dominic in his initial. Losses are inevitable. Even the best-laid plans can go awry in the market. Accepting that losses are a normal part of trading will help you stay level-headed and avoid emotional decision-making. Don't let emotions rule. When losses pile up, it's easy to fall into the trap of revenge trading. Remember, the market doesn't care about your feelings. Stick to your strategy and avoid impulsive decisions driven by frustration or the desire to get even. The market doesn't owe you anything. Just because you've had a string of losses doesn't mean a win is due. The market is random, and each trade is independent of the last. Don't fall for the gambler's fallacy. Respect the market signals. Technical indicators and market trends are there for a reason. Ignoring them because you're chasing a win is like playing Russian roulette. It's a gamble you're likely to lose. Discipline is key. Develop a solid trading plan with clear entry and exit points, and stick to it. Don't let emotions or the illusion of a sure thing lead you astray. Focus on the long term, learn from your mistakes, and never stop educating yourself. Harry had never been given much in life. He didn't come from a rich household. Heck, his dad bailed on him when he was just 4 years old. Harry didn't hit the genetic lottery either. He wasn't a brilliant kid. He was an average-looking guy at most. He didn't have much luck with the ladies because he sucked at dating. And because Harry didn't have much luck with his education either, he flunked out of school. This track record of bang average and failure got Harry earmarked by his family members as the guy going nowhere. And when he became a man, he pretty much lived up to the expectations those around him already had of him. And as you could guess, Harry didn't have much luck when it came to making money. He tried lots of things, and because of his track record of failure, there was nothing he succeeded in. As a result, Harry's finances sucked, his relationships sucked, and his life sucked. Years went by, and Harry dabbled into blogging where he had a little success. However, Harry being Harry, this success was short-lived because he celebrated too early. He abandoned the patience, discipline, and hard work that got him that little bit of success in the first place. He then went into crypto trading. He became an overnight success. But Harry being Harry, he lost it all again. He then tried forex trading, and Harry being Harry again, he blew multiple banks on several occasions. And not only did he lose all his funds, but this time, he was knee-deep in debt. Dejected, depressed, alone, and in despair, Harry couldn't ignore the pattern of failure that has characterized his whole life anymore. So he started contemplating, his failure written in my stars. Am I destined to be a failure in anything I do for the logical side of trading? And he started seeing better results with his trading. But the amazing part was that not only was he seeing better results with trading, he was seeing better results in life. If you've been watching my channel, you'll know that I'm Harry. And I'm willing to bet top dollar that some parts of my story are similar to yours. When you think of trading, what comes to mind? Numbers, charts, risk, and uncertainty. What if I told you that the psychological lessons we learn from trading can be applied to everyday life? Well, it's true. And my life is a testament to that. Looking back at my journey as a trader, I can tell you I am a much better person today. My decision-making is better. My financial goals are within my reach. My dating life has improved massively. My relationships have improved significantly. And I keep getting a better understanding of life while I learn daily. I'm no longer that person who looks at the chart and think I need to take every trade opportunity. My mindset has shifted from scarcity to abundance, and I now approach the future with increased confidence. This positive change is attributed to the ongoing process of psychological growth that I've experienced and will continue to undergo as a trader. The psychological aspect of trading teaches us the importance of emotional control, the value of patience, continuous learning, resilience, risk management, and much more. Mindset matters. Harry's initial failures were largely due to a self-fulfilling prophecy. Harry, believing he was destined to fail, he inadvertently created the conditions for failure. A positive mindset, on the other hand, can be a powerful catalyst for success. Emotional control is essential. Harry's impulsive decisions, often driven by fear or greed, led to many of his setbacks. Emotional control is crucial in trading and in life. By learning to manage emotions, we can make more rational and informed choices. Patience is a virtue. Harry's tendency to celebrate early and abandon his discipline led to numerous failures. Patience is essential for success in both trading and life. Cultivating patience, we can make more considered decisions and avoid impulsive actions. Continuous learning is key. Harry's journey demonstrates the importance of continuous learning and growth. Seeking help and actively working to improve his skills, he was able to turn his fortunes around. Proactive action is essential. Harry's success came from taking proactive steps to improve his situation. Instead of passively accepting his circumstances, he took control and made the necessary changes. On a quiet day, on the trading floor of a prominent funds company in Boston, tension crackled in the air as worry, so heavy, it's reflected in the eyes of men in expensive suits. Among these men was Ethan, a brilliant young trader with a mind sharper than any you have ever met, who was sat, glued to his screen. Ethan believed he could control the market with his complex strategies, but today, the market was a wild beast, not a waltzing partner. His screen flashed red with every tick, like a cruel joke in the quiet room. He felt panic rising, his fingers itching to make a rash trade to fix everything. But then, a steady hand landed on his shoulder. It belonged to William, a seasoned trader at the company with a knowing smile in his eyes, despite the tension. "Easy there, son," William chuckled. His voice was a soothing rumble amidst the electronic cacophony. "Market's having a laugh today, ain't it?" Ethan sputtered, frustration battling with a sliver of dawning realization. "But my indicators, the RSI." William chuckled again, a rich, earthy sound. "Indicators are like compasses, boy. Point you in the right direction, but they don't account for the wind." He gestured at the room. "This market, Ethan, is a living, breathing beast. It's driven by fear, greed, hope, all those messy human emotions your fancy algorithms can't capture." Intrigued, Ethan leaned in. "So what do you do?" William's smile widened. "You learn to read the room, son. You learn to see the sweat beading on a forehead before a stop-loss gets hit. You learn to see the manic glint in an eye before a buying spree. The market whispers its secrets to those who listen." And over the next few weeks, Ethan became William's apprentice. He learned to translate market gyrations into human psychology. He saw the dip before a major news announcement as investors collectively held their breath. He saw the surge after a celebrity endorsement as FOMO took hold. Slowly, his trades started to sing a different tune, one that resonated with the rhythm of human nature. One day, the market went haywire again. News of a potential trade war sent shockwaves through the market. Ethan, however, felt a strange calm. In that market, he saw a flicker of uncertainty in the eyes of a usually bullish trader, a tremor in the hands of a normally stoic analyst. He knew then that this wasn't panic. It was a calculated repositioning. "Buy," Ethan declared. The room erupted in disbelief. But Ethan's voice was firm, and he held his ground. He bought heavily, going against the tide of fear. A tense silence followed, then a slow, almost hesitant rise in prices. By the end of the day, Ethan had not only recovered his losses, but turned a hefty profit. As the room emptied, William clapped him on the back, a proud glint in his eyes. "Welcome to the real jungle, son," he said. "The one where the lions wear Armani suits." Ethan grinned. He finally understood. The market isn't a machine to be outsmarted. It is a dance floor, and the key to success is learning the steps. The thing is, a lot of traders want the results without the effort. They skip the valuable learning process that experience brings. Many people have asked me for that magic trading strategy, and even if I make a strategy video, there's no guarantee you'll profit. Remember in the story, William's years of experience were crucial for Ethan's success. And just like Ethan learned to combine technical knowledge with understanding human psychology, you need to master these things to be successful as a trader, and you have to put in the time to learn. In this video, the illusion of control is a trader's downfall. Ethan's initial belief that he could control the market with his complex strategies mirrors a common pitfall for many traders. The market is inherently unpredictable, influenced by a multitude of factors beyond any individual's control. Overconfidence can lead to reckless risk-taking and ignoring warning signs, ultimately resulting in devastating losses. Successful traders acknowledge the market's inherent uncertainty and focus on managing risk rather than attempting to control outcomes. Embrace the human element. While technical analysis and charts are important, they don't tell the whole story. The market is driven by human emotions like fear, greed, and hope. Learning to read the room and understand market sentiment can provide invaluable insights into potential price movements. By combining technical analysis with an understanding of human psychology, traders can develop a more holistic and effective approach. The importance of mentorship and continuous learning. Ethan's transformation under William's guidance emphasizes the value of mentorship and continuous learning. No one is born a master trader. It takes time, dedication, and the willingness to seek wisdom from those with more experience. The market is constantly evolving, and successful traders are lifelong learners who adapt their strategies and knowledge base accordingly. Discipline and patience over impulsiveness. The allure of quick wins can be tempting, but discipline and patience are the true hallmarks of successful traders. Having a well-defined trading plan and sticking to it, even during periods of volatility, is crucial for long-term success. Avoid impulsive decisions driven by emotions like fear or greed, and focus on executing your strategy with consistency. The market rewards adaptability, not rigidity. Just as the market is constantly changing, so too must your approach to trading. Don't get stuck in the past or rely solely on strategies that worked previously. Analyze each trade with a fresh perspective, taking into account current market conditions and sentiment. By remaining adaptable and open to new ideas, you can navigate the ever-shifting landscape of the market and uncover new opportunities for success. Regina, the hurricane Ramirez, wasn't supposed to be there. A rookie with barely a year under her belt had somehow clawed her way into the final round of the prestigious Giant Trader Championship. Her opponent, the titan of the market, the legendary Iceman Ivanov. Ivanov had built a reputation on emotionless precision, his trades calculated down to the nanosecond. Regina, on the other hand, traded with a fiery passion, her gut instincts a whirlwind against Ivanov's icy logic. The opening bell echoed, and the trading arena, charged with nervous energy, watched as Ivanov, a master of technical analysis, meticulously followed his charts. Regina, however, saw something else, a subtle shift in the social media sentiment of the asset she was trading, one that her veteran opponent had missed. With a gambler's intuition, she dove in, buying heavily. The first hour was a nail-biter. Ivanov's calculated trades kept him neck to neck with Regina's audacious gamble. The crowd roared as the market teetered on a knife's edge. Just when it seemed Regina's luck had run out, the social media buzz she'd banked on translated into a real-world surge. The stock skyrocketed, and Regina's lead became insurmountable. The final buzzer silenced the pandemonium. Regina, the unknown rookie, had dethroned the king. As confetti rained down, Ivanov's icy demeanor finally cracked as he approached his opponent. "You shouldn't have won," he rasped. Regina, still buzzing from the victory, leaned in. "Maybe not," she whispered, "but I believe I could." A hush fell over the crowd as Ivanov reached into his pocket and pulled out a small, encrypted flash drive. "This," he said, his voice barely audible, "contains everything I've learned. It's yours now." Regina's jaw dropped. Here was the ultimate validation. The Iceman, humbled, acknowledging the power of a winning attitude. It wasn't just about skill or knowledge. It was about the unwavering belief that victory was possible, a belief even the greatest analysts sometimes lacked. But Regina's journey wasn't over. Fueled by her win and Ivanov's gift, she launched her own trading firm, the Hurricane Capital. She hired a team of bright minds, confident in her ability to lead them to success. However, the harsh reality of the market soon set in. Her initial audacious strategies, fueled by intuition and social media trends, began to backfire. Losses mounted, and the fire in her eyes began to flicker. One quiet evening, amidst the sea of red in the trading journal, Regina remembered the flash drive. With a deep breath, she plugged it in and began to sift through the wealth of information Ivanov had entrusted to her. A treasure trove of knowledge that her impulsive style had ignored. Shame washed over her. She'd mistaken luck for skill and nearly paid the ultimate price. But as she delved deeper, a new determination ignited within her. She would learn from her mistakes, master the knowledge Ivanov offered, and become a true champion. Not just by chance, but by skill and unwavering spirit. The unpredictable nature of trading is what trips most of us up. Beginners might snag a lucky win. Believe in yourself, even when the odds are stacked against you. Regina, the underdog, showed us that unwavering self-belief can be a game changer. Don't let fear or doubt hold you back. Trust your gut, back it up with knowledge, and go for the win. Don't confuse luck with skill. Early wins can be intoxicating, but remember, even a broken clock is right twice a day. Build a solid foundation of knowledge and discipline, so you're not just relying on lucky streaks. Never stop learning, even from your rivals. Ivanov, the seasoned pro, taught us a powerful lesson in humility. There's always more to learn, even from those you compete against. Stay curious, seek out new knowledge, and keep growing as a trader. Attitude is everything. A winning attitude isn't just about positive thinking. It's a skill you can develop. Train your mind to stay calm under pressure, see opportunities in challenges, and bounce back from setbacks. You have to adapt. The market is a wild beast, always changing. Don't get stuck in your old ways. Be like Regina, willing to adjust your strategies and learn new tricks. Remember, the only constant in trading is change. Bartholomew Billingsworth wasn't born with a silver spoon, but he discovered its glint reflected in the polished chrome of a used car salesman's smile. That, and a knack for reading people's desperation. When the stock market took a roaring turn a few years back, Bart saw his opportunity. He wasn't a trader, not by a long shot. His knowledge of the market came from late-night financial news snippets and a library book with a picture of a bull on the cover. But he could spin a yarn. Thus, Billionaire Bart was born. Online courses, slickly produced YouTube videos with booming voiceovers, and a website plastered with photos of Bart in front of rented Lamborghinis, never mind the exasperated owner glaring from the passenger seat, all painted a picture of a self-made financial Midas. People flocked to Bart, drawn by the promise of easy riches and a life of poolside cocktails. Bart did have a system, of course, a system that involved a dartboard, a vintage globe, and a healthy dose of random chance. He'd throw a dart, spin the globe, and declare some obscure foreign stock the next big thing. It worked, sometimes. Beginners, lucky enough to ride a random upswing, hailed him a genius. Bart, ever the showman, reveled in their praise. But the house of cards began to wobble. A particularly unlucky tip led to a group of disgruntled investors storming the comment section of Bart's latest video. Then came the inevitable blog post by a real financial analyst, dissecting Bart's system with surgical precision. The followers, once a ravenous horde, started leaving in droves. Panic gnawed at Bart. He built his entire life, his mansion, his fleet of mostly leased luxury cars on this charade. Desperate, he doubled down. More outlandish predictions, more exorbitant fees for his exclusive courses. It was a final, frantic attempt to keep the money flowing. It all came crashing down on a Tuesday. The SEC, alerted by a whistleblower, raided Bart. The rented Lamborghinis were towed away, replaced by a beat-up police car. As cameras flashed, a sheepish Bart emerged, the dartboard clutched under his arm like a pathetic shield. The billionaire was revealed for what he truly was, a used car salesman in a slightly more expensive suit. His trial was swift. His victims, though angry, were mostly left with bruised egos and lighter wallets. Bart, however, was left with nothing. The mansion, the cars, even the ill-gotten gains, all gone. All that remained were the deflated dreams of the people he'd misled, a cautionary tale for anyone chasing financial mirages. As for Bart, he was last seen at a local library, browsing the how-to section. Maybe this time, he thought, with a grimace, he'd choose a different career path, one that didn't involve spinning a globe. I know your dream is to leave the rat race behind, living a life of luxury fueled by the profits made from the financial market. The good news is, you're not alone. But the truth is, the internet is flooded with so-called gurus promising quick riches and easy wins. And this makes it easy to get swept away in the hype. The problem is, characters like Billionaire Bart often represent a dangerous path that prioritizes flashy lifestyles over actual trading knowledge. This focus on the get-rich-quick schemes and other misleading ideas has wreaked havoc on most traders' psychology. And if you're not careful, you'll fall victim to this too. That's why in this video, don't be fooled by the gurus. Flashy lifestyles and guaranteed wins are often just marketing ploys. Real trading success takes hard work, not shortcuts. Have a plan, not a prayer. Trading without a plan is like sailing without a map. You're just drifting, hoping for the best. Define your goals, risk tolerance, and strategies before you enter the market. Overtrading is a trap. Chasing every trade is a recipe for burnout and financial ruin. Focus on quality setups and let go of FOMO. Take care of yourself. Trading is mentally demanding. Prioritize sleep, exercise, and healthy habits to stay sharp and avoid emotional decision-making. Social media is a double-edged sword. It can be a great source of information, but also a breeding ground for hype and misinformation. Be selective about who you follow, and always do your own research. John's heart pounded as he entered the office building. His palms were sweaty, his briefcase clutched tightly in his grip. Life hasn't been kind to me, he thought to himself. For all the efforts I've put into investing, for all the years I've learned about the markets, I should have had something to show for it. His musings, almost like a prayer, were almost audible to the guy standing next to him in the doorway. But maybe his luck was about to change. Maybe he's about to get a substantial amount of money from Mr. Caldwell to actually trade with. Maybe his dreams are about to come true. Through luck and happenstance and a long-lost high school friend, he had managed to secure a meeting with the most successful investor in Boston, Mr. Thomas Caldwell. Caldwell greeted him with a curt nod and a piercing gaze. As they settled into the worn leather chairs in Caldwell's office, John couldn't contain his excitement. "Mr. Caldwell," he began, "it's so nice to finally meet you, sir." Yeah, I get that a lot. Go straight to the point, young man," Caldwell said in a crass voice that sent chills down John's spine. The words almost eluded John, but he managed to blurt them out. "I've discovered a way to make you incredibly wealthy, sir." Caldwell leaned back, an eyebrow raised in skepticism. "Is that so?" he muttered. "Young man, I've heard many a tall tale in my time, but I'm always willing to entertain new ideas." John took a deep breath and launched into his meticulously prepared pitch. He explained his strategy of going big on a first-of-its-kind technologically innovative company, highlighting the huge short-term upside, the huge value investment it represents, since most people don't know about it yet, and the power of going all in early. He cited historical data, market trends, and case studies to support his claims. As he spoke, Caldwell listened intently, his expression unreadable. When the pitch was finished, an uncomfortable silence filled the room. John held his breath, thinking to himself, "This is it. This is the moment that determines my financial future." Finally, Caldwell broke the silence. "Your ideas are intriguing," he admitted, "and your passion is undeniable. But I must caution you against the siren song of quick riches. Wealth accumulation is a journey, not a destination." John's heart sank. Had he misjudged the situation? Was his grand plan merely a fantasy? Caldwell continued, "The principles you've outlined, finding intrinsic value, going big on the right investment, and going against the norm, are the foundations of successful investing. However, they require time and unwavering commitment to bear fruit." John's spirit lifted. Perhaps all was not lost. Caldwell's words, though not the immediate validation he had craved, were filled with wisdom and encouragement. "Remember," Caldwell advised, "the market is not a game of chance. It's a mechanism for owning a piece of a business. When you've chosen your investments wisely, hold them for the long haul, and let the power of compounding work its magic. That was how I did it." Compounding. What in the seven hells does that mean? And with that one word, John's short-term plan for riches came crashing down. However, amidst the spectacular failure of his pitch, John left Caldwell's office that day with a renewed sense of hope and purpose. And in the years that followed, John never forgot the valuable lessons he learned from that meeting with Thomas Caldwell. He now understood that true wealth was not built overnight. It was the result of careful planning, prudent decision-making, and the patience to weather the inevitable storms that would arise along the way. He diligently researched assets, invested in those with strong fundamentals and a durable competitive advantage, and resisted the temptation to chase fleeting trends. And as he later became a successful trader himself, he realized that the secret to lasting wealth was not a secret at all. Nick Murray, a financial industry expert renowned for his insightful writing and captivating speeches, famously said, "Timing the market is a fool's game, whereas time in the market is your greatest natural advantage." Get-rich-quick schemes are a mirage. Trading success takes time, discipline, and a realistic approach. Avoid falling for flashy promises and focus on building a solid foundation. The market is unpredictable. The market is a wild beast, not a predictable machine. Even the best strategies won't always work. Focus on managing risk and adapting to changing conditions, rather than trying to control the uncontrollable. Patience is your superpower. Building wealth takes time, just like growing a mighty oak from a tiny acorn. Embrace the power of compounding and stay committed to your long-term goals, even when the market gets stormy. Seek mentorship, but be wise. Learn from experienced traders, but be wary of fake gurus who promise the moon. Look for genuine mentors who prioritize your success and offer sound advice based on proven principles. The secret is no secret. There's no hidden formula for trading success. It's about mastering the basics, staying disciplined, and continuously learning. Remember, even the best traders have losing trades. Focus on the long game and build your wealth brick by brick.